All right, hey, good morning, everyone. It is almost 10 o'clock. We've been trading here for a little more than an hour this morning. And if you get your text updates and things like that, you're looking at corn that's down 31 here on Friday. And so I want to put it in context so you can see exactly what we're dealing with. This is your daily chart over here on the left. This is your 240-minute or 4-hour chart. Here's your 60-minute, and this is a weekly chart over here on the right. So let's start with the higher time frame, okay? From the weekly chart, and this is just of December corn, this is not continuation. What we're working here is a hook reversal. We traded up to this 630 area on Wednesday after the crop conditions report came out, right? We blew higher, and then yesterday and today we've been working lower, and at current we are sitting right on the bottom of the weekly cloud and working a hook reversal. Now on the daily chart, you don't have that same action, but what we do have here is a 3 inside down, where you have a full body of a daily candlestick that traded inside this big day on Wednesday, and then today has accelerated lower and taken out the bottom. That's called a 3 inside down. That is a candlestick reversal pattern, and we're now trading right below the low here of Tuesday. Okay. Now on the shorter term stuff, we'll get to that in a minute, but if you remember on Tuesday, what we were looking for on this day was an acceleration to the downside that would get to some sort of Fibonacci cluster where we could then see the market rally from that and either start a new wave sequence higher or roll over and start a new wave sequence down, because this move up to this point was 13 waves, and then you would expect a 21 wave down sequence or a 3 wave down followed by a new 5 wave up. Well, with the conditions report that came out Friday, this just went ahead and extended higher, and that did not change our count at all. This was just an extension of the 13th wave, and now this morning we're getting a deep retracement here, and it's too early to say, hey, this is a reversal. This could be this could just be a pullback in the context of this larger sequence. And let's look for some clues to see exactly what it is that we're looking at. Okay, so your 4-hour chart, we've peaked out of wave 5. Now we're tracing into a wave A, and we're still holding the 4-hour cloud. As long as this cloud holds, you have to give the bias to a higher move up. Now, what we're seeing is this move from overnight. We're starting to see this get bought here just a little bit. Okay, so this is the peak from Wednesday. This is the last 2 days of trade down to today's low at 584. If this is a wave A, we should see a wave B accelerate up to the 602 to 612 area where we'll get a B, and then we should see it come test these lows. And it's this point right here where if it breaks it and reverses from, that's where you want to buy it, or you could try to buy it here and wait and see how it trades up in here. So corn's in a really, really difficult spot. The other telling signal here that we have from Wednesday, Thursday, and today's trade is you have a gap here on the open from Tuesday's close to Wednesday's open, and then you have a gap from Wednesday's close to Thursday's open, and that left what's called an island up here. You have 2 gaps, and that island is a reversal pattern in and of itself. So we have several bearish reversal patterns working at once. On the weekly chart, you have this signal, which will confirm on a close below call it $6. You have the daily 3 inside down, and on the short-term stuff, you have an island reversal in a wave 5 position. So that is all evidence of a completed 13 wave sequence, and we're now starting a new 21 wave sequence. So the time to sell that is going to be up under this B wave rally that we get, should be 38.2 to 61.8. That's where you want to sell that market. So it's a pretty simple trading strategy. Okay, we're going to wait, we're going to sell it on a rally, and you have a stop right here at 629. So as long as this high holds, anything below that should be perceived as bearish as long as these daily signals and weekly signals go ahead and confirm. Limit today is 45 cents on corn. So that would put us here 11 cents from here, so down here at 575. If you remember, we said earlier in the week, and we've been saying for several days, that 575 is a really big point, because this is this pivot area right in here that's held corn as resistance for a long time. Now, if we trade back to that, we want to see the market either accelerate through it, and that's your very clear sell signal, or we want to see it reverse from it. So if we get to limit today, then we'll see what it does Sunday night. And my expectation is that if rains materialize and we start raining, we're going to go ahead and accelerate this thing back to the downside. And that's because rain makes grain, and our exports are terrible. So you have ethanol and exports that are dragging way below expectations, to the tune of 300 and some million bushels. So we're well below on demand. And if our crop gets bigger with rain, then you would expect all of this premium we put in to be taken out. And then from this point here, this all becomes resistance again. But for today, it's support. And you want to see it hold if we come back down and test it and bounce. So if we, so depending what your needs are and where you're at, right, there's two ways to trade that. You can be long above this shelf, or you can look to sell this on a little bit of a bounce on the shorter term charts into a B wave. And if you get that B wave, that's a very clear risk reward and a very big downside, because if those rains materialize, then 490 is not going to stop corn. We're headed much, much lower if that carryout is over 2 billion bushels. There's just no way around it. You know, even a carryout of 1.5, 1.6 puts us lower than where we are today. So corn has to have more demand and much worse weather in order to get a move that might persist. So what happens if we do reverse here and just go straight back up, and this, you know, we sell it and then it goes back higher? Well, where are we going to go? You know, 638 is this high back here on October 10th. 680 is the contract high. And above that, I don't know where it goes. But as far as a trading strategy, I don't see any reason to not trade against that high and this high right here from the short side. I think it makes all kinds of sense given the fundamentals that we know. So we're going to be sellers of corn on a small rally. And if this signal goes ahead and confirms, we may just go ahead and sell it even sooner and not even wait for that B-wave rally, because it could just accelerate to the downside. So stay tuned. We may make some trades here later in the day depending on where we're closing. You know, we're probably going to sell a rally, and we'll probably, if we close down here at the bottom, we'll probably wait and see what happens over the weekend. But as we sit right now, I think this is turning out to not look like a sustainable rally for corn at all. So be patient, let the market come back and prove itself, and be ready to take action, because the bullish argument that we're going to burn Iowa up is just really not in the forecast. That's not what's being suggested. And I think that's an acute risk reward right here at, you know, call it 605 to 620 as a sell zone, and 629 or 630 as an exit. I think that's pretty simple. And if you have long needs and you need to get them covered, then this is a perfect spot to step in and buy it between 585 and 575. So if you're needing to hedge cattle feeding needs, this is a great spot to step in. So stay tuned. There's going to be lots of action here into the close, and lots of action next week. So we'll see what happens. All right, that's it. Thanks, guys. Talk to you in a bit.